All right. Good morning, everybody. So we made it to the middle of the week. We have a lot of data today to deal with. So just take it easy, right? There's no rush to get things done. You don't need to just pile into everything. We have QRA at 8:30, and there's been some whispers that they may try to step away from the Yellen policy that the previous Secretary of Treasury was running, right? We had a change of the guard with the new administration. They got rid of Yellen, replaced her with Scott Bissett. And so far, for every QRA we've had, he just continued to do what she was doing. He didn't make any changes, right? And we saw that reflected in the market. No change in the quarterly refunding, no change to market behavior. If he decides to make some adjustments between the back end and the front end, we could see changes in market behavior. So that's one piece all by itself. And it can get a little confusing, right? Because you really don't hear much about QRA. And in fact, most places never even mention it. Then we have GDP at 8:30. We're going to be getting those numbers. And those numbers all by themselves, they can move the market. Oh boy, they can move the market. Even just GDP revision numbers and GDP survey numbers, GDP hypotheticals, anything GDP related moves the market. So there's that one. Then we have the FOMC release at 2, and then we have Powell at 2:30. We also have the oil inventories today coming out at 10:30. And while, it's not the 1980s and 1990s anymore, oil still moves markets. It's less frequent, but it does happen, especially when it comes to the strategic petroleum reserves and whether or not they need to be refilled and if the collars are still in place. So that's another really big event that could happen today. I think we're all pretty comfortable on the idea that Powell's not going to cut, although I still continue to see a few small isolated groups of people that are all just gung ho excited that there's going to be some surprise cut. It's always possible, right? But markets don't like surprises, and Powell knows better than to deliberately shock the market without a reason. He's done it before. That Jackson Hole event in 2002 is a moment that will go down in infamy when he did that little mic drop moment. So he can do it, and we've seen him do it. But there's this stubborn nature, right? That when someone tells me to do something, I don't really want to do it. Just because you told me to do it, I don't want to do it. Even if it's the right thing to do, I don't want to do it because you told me to do it. And Powell's kind of maybe in that boat right now, right? That he was probably getting to the point where they're ready for a cut, and now he just doesn't want to cut, well, because they're trying to bend him over a barrel. But I think today he could offer some middle ground, kind of save face and keep his feet planted at the same time, and maybe get some pressure off of his back. And that would be by offering something we haven't had in a long time: forward guidance. They removed forward guidance a while back, and they said, well, just play it by ear. We're going to run it one step at a time. And every meeting, we will let you know what we're going to do. That's not always how things run. A lot of times they will say, over the next X amount of meetings, we're going to raise, we're going to cut. They will provide forward guidance. And they haven't done that in a while. We're running out of meetings for him to react. too, right? So if we're running out of meetings, all he's got to do is start providing some forward guidance. He could suggest, for an example, that we are going to cut in September or October, not as a maybe, like, well, we'll see the numbers and if everything looks good, if blah, blah, blah. Just straight out saying we're going to cut unless we crash. Right? That would be something that we've really been missing for a while, is that forward guidance. And I think that that would appease the people that are, trying to drown him, and at the same time allow him to save face and not cut today, hold his ground. We can see if we look at the September probabilities, it's running at 64% that we're going to get a 25 basis point rate cut. That's your standard cut, right? Just a little quarter cut. That's not overly high. 64 is not that bad. Yeah, the dollar made some serious moves in the last few days. Absolutely, it has. And it's Europe and Japan. That's why we were talking about the carry trade yesterday. So then when you look at October, we're at 50, and look at December, they're looking at two cuts with a 44%, right? That'd be, by the time we get to December, we've had two cuts, right? They're not talking about, putting two cuts in on December. So all he has to do today is provide forward guidance, something that we haven't seen in quite a while. And we would be looking at a market, taking off to the upside, 6,600, 7,000. There's a lot of money waiting on the sidelines. And there's a lot of people who continue to try to short the market, which helps grind us higher. I know that might be confusing for newer traders, but for those who know, you get it, right? Those shorts are just providing the fuel for the long fire, and it's just fantastic. We keep going. But once everybody hops on board and there are no more shorts, right, then we get to play the other game. So this morning, we're not up by much. We're not down by much. Small caps leading the way at 0.5%. NASDAQ much below that at 1/4. Then the S&P, and far, far away is the Dow, basically flat with Europe in the red. These home sale numbers are way off. I didn't mention it because we have everything else that's so in our face this morning. I think this is going to slip by for today. But if we do get these numbers, I think the market will circle back to these later in the week. They're not going to go away, right? They just may not be the headlines today that really galvanizes people. But these numbers are way off. And if we get that sort of a slowdown, it's going to matter. So keep your eye on the pending home sales today. See what we get at 10 a.m. And it doesn't show it here, but we do have crude at 10:30. It's just going to be all day long. News is coming at us, right? We're not expecting anything out of the Canada's rate decision. The Canadian PAL version is just going to kick the can down the road. And they're going to run a presser at 10:30 when we get our inventories on crude. And if you're trading tonight, keep your eye on the bond investment news out of Japan. You know, funny enough, the astrological traders that are out there, they drive they drive me crazy. But Thinkorswim's got astrological tools built into the platform. Tom Sosnoff really did just give everybody anything they wanted when he was trying to make Thinkorswim popular back in the day. Yeah, you guys didn't know that? I'll show you. It's on the homepage of your Thinkorswim platform. Back in the day, he was trying to make it popular. You know, it was the first broker he'd ever made. And if you were a client on the platform and you requested something, he tried to offer them anything, you know, that clients asked for, which is why when he built Tasty, he said, I don't care what clients ask for. I'm putting in only what I want. So don't lose faith in Tom just because he appeased clients with, you know, everything they asked for in Thinkorswim. Because when he made Tasty, he sure didn't put it in there. And Dough, you know, when he made Dough, that was like the most streamlined product yet, and uh, it's like Robinhood or Webull, but better. There was concerns about that tsunami after the earthquake in Russia last night, but they're already downgrading the big headlines, and it looks like Hawaii and everybody is safe and that it's just going to pass on by. If it didn't, and you're trading on Optimus or Iron Beam, you may not be able to reach some of your contact people because a lot of them are in Hawaii. And if it gets bad over there, then they're gonna lose communication. The put wall dropped back a very small amount. It looked more like a functioning dynamic than anything else. It didn't look like positioning. We are dancing around that 4-period moving average again. After testing it on Friday and Monday, we broke it on Tuesday. We got back above it this morning. We're just holding on by our fingernails. But you can clearly see the high that was set and then the last higher low. We're now putting in lower highs and lower lows, right? So it's a count. You know, you got to have a full set, and a full set is two of each. You need two lower highs and two lower lows, or flip it around, two higher highs and two higher lows. So we've got our first lower high, and we have our first lower low. Now, at the moment, we've got this, and this isn't anything yet. If it falls back down and breaks this low, we're going to count that as a lower high. We can't count it as a lower high yet. And we can't count this as a higher low yet because we're still just sitting here. So it needs to resolve itself. And the thing is, with it being such a fantastic day for data, this is the range that we have to mitigate. So we could wick out on QRA at 830 or GDP. Either one of those could do it, but we're still expecting to hold the line into FOMC. You could probably use something like Edgeful for the FOMC day itself. You can't use it for FOMC weeks, right? Because that's encompassing too much data. but you could use it for the single day of FOMC. And I didn't do this, but I was thinking about it last night that there are FOMC days where we start the morning and run up, down. I don't care about direction, just that we actually don't sit sideways on Wednesday. It does happen. It doesn't happen very often. Most Wednesdays before FOMC into the 2 o'clock time frame, we just chop, and it's sideways, it's kind of violent, it's ugly. We don't get any really good trades, and it's just trash. But not always. And I think that's what lures people in, right? Is that they know really in their heart that it's just going to be one of those choppy, nasty days like last Thursday. And then even though they know that, they come in and try to trade anyways because just maybe it might be something good. It's possible, but I would bank on the idea that it's going to be choppy and nasty and not something that we really want to focus on until at least the meeting itself, right? But violence begets violence, so we'll see what we get. Be prepared for the idea that we actually break and run. I'm going to be trying to play the reversals just like yesterday. Those worked really well. Didn't get as much out of it as I would have liked, but the reversals did play well, and we held the line just like we were expecting to. So I'm going to run that theory again today, as long as it works. But if we do break out and expand beyond the 1, 2, 3, 6 today, then it's game on, and I'm going to run it in that direction. Yeah, definitely a 111 is on the table, maybe a 1, 2, 3, 6, but getting beyond that and actually continuing to move, it's possible today. So when we do bring it out to the daily and we institute another form of technical analysis, OCR, it's not really popular because it's not really well known. OCR is one candle reversal, and instead of using a population of candles to define, say, a trading range, just go back to something like Thursday. We had a collection of candles that defined this as a range. A head and shoulders, a wedge, bull flag, bear flag, anything like that. You have a lot of candles there. Using OCR analysis, one candle defines the entire range because we can look at this daily bar and we can recognize, for an example, last Thursday, that this doji on the daily was a collection of all these bars on the 15-minute, right? That there's whatever, 15, 18 bars here in this single doji. OCR style analysis. When we bring that up, we've got our high that is set. There's our lower high. There's our lower low, just like we were doing the count. Only this removes some of the trouble that newer traders have trying to figure that count out, right? When I was demonstrating where the count was right now and having the discussion about this current little area, we can't count it yet. This can be confusing for newer traders to count. Take it out to a daily and count it that way. OCR style. Very simple. It's very easy. You just got to wrap your head around it. So with that in mind, if we wick down at all, that's all we have to do is just wick down below yesterday's low and come back in again. That will provide a lower low. That's all it's going to take. And we already have a lower high for today. All we have to do is end the day. The only thing that would stop us from getting a lower high today is if we run up and we break yesterday's high with a new high today. That's all it would take. We don't have to close up there or do anything else. Just wick higher than yesterday's high. And now we've got a complex topping pattern rather than a full set of lower highs and lower lows. So today's bar has a lot riding on it. And we do have that 10 down there. So first touch is going to come into play if we do break yesterday's low. That's the target. To get there, we've got some trouble. We got to get through 6,400 and 6,392 cog line and then get down into that 10. It's not impossible, but we've also got the volatility trigger to deal with, and it's just going to take a little bit of work. The thing is, none of these pivots are going to matter when it comes to the face of the violence that could come in with the flow, right? We get some headlines like GDP. We could break pivots like they're not even there, right? So the old phrase about picking up pennies in front of a steamroller, that would be a really, really good analogy to fit that. All right, we're closer to the upper edge than we are the lower edge simply because we're up this morning, but we're only up not even 0.25%. So sure, it seems like we're up more, but we haven't really done much. The thing is, the range for the day is 47 points. That's not very much either, right? Just we've been running narrow ranges and that shrunk the ADR. It's a math function. It's all it is. These ADRs are going to come into play when we break them. Yes, it does. It does imply they didn't get much done. And that makes sense because why would they, right? If I was running, millions in management, I would not try to step in front of GDP numbers and FOMC numbers and QRA numbers, especially when they're talking about changing the playbook that Yellen was using and giving us something else. Absolutely, I would wait. And that's what we expect out of them, to wait, to get the data, and then to make decisions. And I don't want this to sound bearish because the decisions that they make today do not have to be negative at all. There's been so much money sitting on the sidelines that if it gets engaged, we're headed up. And that, I don't think a lot of people are ready for that upside move yet. So yesterday we got inside the weekly floor pivot channel. We made it back out just barely, but barely does count. Today's floor pivot is lower than yesterday's. That's bearish. Price opened underneath it, and that is also bearish. We've made it back to it, so we don't have an MDP, missed daily pivot. And right now we are sitting inside of a really wide floor pivot channel. This wide channel suggests that if we break out, the breakout doesn't stick. And it's the widest channel we've had this week. Keep in mind, though, that this channel doesn't make price break out, and it won't make us come back in if we do break out. It doesn't make price do anything. But the breakout range that it's talking about is yesterday's high or yesterday's low. So this wide channel implies that if we break the high or the low, that we will come back inside the box again afterwards. Statistically, that's what it's telling us. But statistics are not guidance. And when you run the numbers and you look at averages, you have to consider event days. Those averages don't pay any attention to event days. And if we went back and looked at how many times the average was broken, I would bet it was broken a lot of times on event days where we actually broke the range and we just kept right on running. They say, for an example, that a wide channel day means that we'll stay inside the box. I'll just use a random number, 80% of the time. So we would break out and come back in 80% of the time, and 20% we break out, we just keep right on running. How many of those 20% was because of an event? I would bet a lot of them. Maybe not all of them, but a lot of them. So base case, we hold the line until at least 2 o'clock into FOMC itself. Then we break the zone and we really get after it. But because of QRA and GDP numbers, we could break this zone well before that, right? We could do it at 8:30 and run until noon or 1 o'clock and then stall out and wait for FOMC at 2 and then move again. And I talked to a lot of traders this week about what we had on the docket this week. And a lot of people don't even know that GDP is coming out or that QRA is here this week. It's going to be a surprise. And you look at things like Spot Gamma, Trading Ticks, other places that do these morning preps, and they don't even mention it. They have no clue what's coming down the pike today, other than FOMC. Of course, everybody's talking about FOMC. So we can see on the larger time frame, we've got this distribution that we're now tangled up in again. We're building it out. I wouldn't be surprised if our point of control moves down into this zone. It gets shallow after that. And then we've got that 63.70 area that we talked about last week, and then 63.50. The distance between that 70 and 50 is not much. And it's likely that if we do get down there, we're going to build it out as a single zone. It would be a wide zone, but I think we would end up filling out that whole thing in a 20 to 30 point range. All based on the idea first that we do get through that 6,400 and expand down into 6,370. I don't think there's any going back at that point, right? We would have to run the whole cycle through before we'd be able to come back up again. So 63.92, and then we would readjust the drawings if we OCC at 85, and that should line us up somewhere around 70-ish. So that puts us on that lower level. But we drop through shallow zones quickly, right? There's nothing here to catch us. If we do pivot in the middle of that and start to run back up, which we have seen before, it's because of a correlated market hitting a support or resistance level and flipping around. For an example, suppose we were looking at, I don't know, bonds, just whatever, right? We're looking at bonds. And while we're falling, the TNX is rising and it hits resistance and starts to fall. And that's where we bounce somewhere in the middle of this shallow area and begin to rise, something like that. So when we see markets turn around, for an example, this high that we made up here, it was all-time highs, right? So it's not like we hit something. When we look at an all-time high and we see a pivot and a sharp reversal and we try to ask, what the heck did we hit? We very likely didn't hit anything, but one of our correlated markets hit something, or one of our inverse correlated markets hit something, and its reversal caused our reversal, and that's why we went back in the other direction. That's why we can't just look at the one thing that we're trading, right? If you're trading the NASDAQ, don't just look at the NASDAQ. If you're trading the ES, don't just look at the ES, because there's markets that move the NASDAQ, markets that move the NASDAQ and the ES and SPY and the Qs, all of it. Everybody's connected. We've been talking about moving this point of control all week. This is the 10-day, 30-minute volume profile in TPO. It finally got moved to 64.11. It's up there with us. One, because we put in the volume up here, but two, because we wiped out that volume yesterday mid-morning that was holding us back, and we had it moved up. The TPO's point of control is not yet moved up there, and the value area hasn't even shifted yet. So there's a big discrepancy between these two right now. That's not likely to stick, but for the moment, it stands out, not just the point of controls, but also the value area. The entire thing needs to shift higher. Once we do that, this is likely the new home for 6 to 10 days. Unless we break this 6,400 and get back down into the 6,350 area and build out that zone down here, we would need to come down and build it out again. If we don't do that, then this is going to be our new point of control for a while, right? Let's see, 1, 2, 3, 4, 5. We got 5 days, 6 days before we even start to get into the volume that made this structure. So at least a week. I would say keep your eye on the TPO. We want to see that get shifted up. $63.90 has a VPOC. So if we do break yesterday's low, that would be a level you want to focus on. We are going to be focused there anyways because we got 63.92 cog line. But if we didn't have a cog line, then we would have had a VPOC line. And I have people all the time asking what these cog lines are, and I get it. You know, they are complicated to explain, and they're even more complicated to try to validate. But you'll notice how those three numbers just keep showing up. They are VPOC levels, they're yesterday's highs or yesterday's lows, they're point of controls, they are measured move targets. They come in over and over and over and over again. So you might not understand the why behind it, but just keep your eye on the 11s, the 32s, and the 92s in the SPX and the ES, and you're good to go. Our range for the week, so far we have done nothing, which is fine because that's what we expected, right? It's what we talked about on Friday, is going sideways Monday, Tuesday, and part of Wednesday into FOMC. That was the whole basis of the Friday meeting, was the discussion of how this week was likely going to be partly a sideways week into the event. That's how we had our base case Monday and Tuesday, that we really wasn't going to do anything and that we were just going to hold the line and come back in. So, you know, when I talk to people and they're wanting to figure out how to prepare for the trading day and to understand, is today supposed to be a good day, a bad day, a breakout day? This is how we get there, right? Looking at the macro events, the economic calendar, having a discussion of what happened and how markets prepare for these sort of situations. We're now just 0.5% above the 10-day. And this has been quite a long run, right? Since May, we've been able to maintain this run here. Minor little dips below the 10 to get a reset, but that's it, right? And those are healthy. There's nothing wrong with those. So it's been a great run. But along the way, we've set this sort of average here, this blue line. And a bit like OCR analysis, we've been trending lower, a little bit of a reset, and we've been trending lower again. We could get, you know, another lower high. But eventually, we're going to need to get a clean slate. And that can happen just by getting back to the 10 with one of these little dips below, something really small and really simple. Or it could be something more complex, like one of these longer, deeper drops below the 10. Not really trying to put in any sort of a gauge on whether or not it's going to be a deeper drop, just that the reset is coming. We can see that because we're running out of room. Very much like a flat top wedge or either a flat top or a flat bottom wedge, where, you know, we rise up and we keep hitting that same spot on the bottom, something like that, and then we finally break it. we're doing the same thing here. It forms a fulcrum point or an apex that we got to get out of. So let's reconnect with the 10, maybe get a little dip underneath it like we did previously. And then what I'm looking for is a big expansion 2% above the 10-day to break this high and get a new high on the meter, and or get a nice wash, something like 1.5 to 2% below the 10, somewhere into this zone here. Wouldn't hurt to look at the options chain and project a move 2% above the 10-day on the SPY, the SPX, whatever. You could trade options on the futures if you want to go that route. And, just check out some lotteries because they shouldn't be too expensive if you're looking that far out on the options chain. Thing is, I think there's still a pretty heavy skew. Don't have much of a smirk yet. Let's try the 15th. Get the monthly. And September. Not much of a smirk at all. We're looking for that volatility smirk, right? Where like that, as opposed to a volatility smile. Smirk's a little off. So we still have right side tail risk, where calls are more expensive than puts. This doesn't do a good of a job as Tasty does because it doesn't have the bell here. But set your lines. And you can see the levels up here. So you've still got more right side tail risk. Even into September. Looking at what's down this morning, we really don't expect any of these to be up or down too much, but we are still holding on to that nugget of an idea that says we could have one of those strange FOMC days where we actually break and run. And the clock is ticking. We got 20 minutes before the data comes out. We still don't have the founder's note for the AM edition. It's likely they're going to wait until after 8:30 to put out their report. But looking at what's down, the VIX is down 1%, but it's still up 2.75% over a 5-day period. So it was up 3.25. It's now, it just changed while I was talking. Over a 5-day period, it's still up 3%. So it was up 3.75% in a 5-day period. Giving back a little bit is fine. It's moving around. It's actually increasing, coming up off of the lows a bit, even while we talk. China's down. Nat gas, which, whatever, care. NASDAQ volatility is down. Looking at what's up this morning. Chips, airlines, really nothing. Really, I mean, just we got nothing. We were looking at the SPDR ETFs yesterday afternoon and was really just surprised at the lack of any trading activity on so many of them, except finance. Finance had some options trading activity, but the rest of them, nothing. It's a bit of a shock, really. So it's crowded out there, right? The crowded trades are really the only trades, and everything else is just being ignored. All right, we don't want a rally day based on pot stocks, and that's what's leading with chips right behind it. Yeah, I heard that on Bloomberg this morning, but it wasn't set yet. Did he finally set it? Trump 25% tariffs on India? Because he was wishy-washy last night when he was talking with Bloomberg that maybe he would do 25, maybe not. They were still talking. I see he tweeted, but I didn't see the full tweet. So is it still that he's talking about it, or did he actually lay it out? Looking at the red candle, I would say he probably actually laid it out, huh? Yeah, I'm not gonna comment on that. I was just wondering, if he had made it clear that this is what his plan was now, or if it was just that he's thinking about 25% tariffs on India, because he'd already mentioned it. He was thinking about 25% tariffs last night. Looking at that red bar, I'm thinking it's more than just him saying, we're considering 25%. And instead, I think he said something more like, we're going to put 25% on them, and the market doesn't like it. Got the volatility trigger down there, then the 1 day expected move and zero gammas at 634 on the SPY. Friday tariff deadline will not be extended. We'll see. What is it they keep saying? It's taco and FAFO, TACO and FAFO. Not going to explain what that acronym is because you know, try to limit the cussing. No potty mouth in the morning briefing. All right, guys. It's a pretty simple day, all things considered. Just work through the noise, focus on what we have here. We got these lower highs and lower lows being developed. And right now, this has to clarify, right, that the pullback here is not enough. So this is not yet a lower high, and this is not yet a higher low. This needs to resolve. And then bigger picture, more broadly, that is our trading range. Two boxes. We got our own Globex range that we need to deal with. We got to get out of the Globex range before we can do anything else. And then we have yesterday's trading range. If we break that to the downside, then we've got the 10-day moving average as your best target to aim for in your short trade, 63.83, 10-day moving average. To the upside, we would need to break our Globex range, run all the way to the top, break that, and then challenge that Sunday night, Monday high, the high of the week. that 64, 57, 58, just round up. And to even do that, we've got the mid of yesterday to deal with, and ADR levels, cog lines, get so many things in the way, you know, to make that run back up. It's not to say that we can't do it, right? Just, it would have to be a really strong push. So be careful, be safe, keep your eye on the news. It's going to be coming in at you all day long.